Good evening, Clifford, the 25-year trader, back with another video. Today, we're going to talk about how you could day trade the market. Even if you still have a job, you can trade while working. And the beauty is you don't even have to watch the market. So with that being said, let's get into it. Okay, so if you still work and you want to trade part-time, like many of us still may have jobs, you can do it. It's pretty easy to do, actually. Now, I trade the futures market, but this could apply to other markets as well. Basically, the best way to do it, in my opinion, is pick a market that moves daily. For example, the S&P 500 is well known for this. Could be the NASDAQ or even the Russell. And if you're trading the futures, what I do is, so the futures market, for those who don't know, it's open like 23 hours a day. As soon as it opens Sunday night at 6 o'clock p.m., it runs all the way till like Friday at 5 o'clock, right? But there's a break. Whenever the market closes at 5 p.m., there's like a 1 hour break and it's closed. But then at 6 o'clock at night, it reopens. And that's when I look for trades. So basically, if you were going to do this, what I would do is first, you want to find out how what is the daily range of your market. So I don't use indicators very often, but I do sometimes check what's called the ATR. Why? Because it just tells me how much the market moves a day. For example, if I'm looking at the S&P 500 right here, I pull up ATR, it tells me 106 points a day. NASDAQ 100 futures, 483 points a day, and the Russell 2000, 60 points a day. That's all you need. So I know this thing, S&P 500, can move 100 points a day. That's the average, right? So how would I use that to my advantage? Well, basically, you could create a trading strategy around that. So like, let's say you know it moves 100 points a day, you could try and catch that daily move. But to do it, I would only risk about 50 points, right? So you risk 50 to make 100. That's 2 to 1. Even if you're wrong 50% of the time, you would still make money. So how would you do this? Well, here's a perfect example. The market just opened a few hours ago. And what you want to do is I like to use the daily charts for this strategy because it's kind of like set it and forget it. So the market opens at 6 o'clock at night. You go to your daily charts. And what you're looking for is rejection. You're looking for these candles that look like the market rejected completely out of support. Now, to do this correctly, you'll want to be able to at least find support and resistance levels on your chart. If you don't know about support and resistance, definitely check out my other videos. I'll make some more in the future about that. But for example, if I look at this low right here, this is in October of last year, right? To show you. You see how this level, uh, the market basically stopped at that level that day. But then the next day, it tried to test that level, but it didn't break that level. Okay, and then see the next day again, it tried to test that level, but didn't break that level. What you're looking for is rejection. What you want to see is the market try to test a support level, but then reject it, like that day right there, October 14th. Then all you do, it's really simple. You place an order right here at the support line, put a like a 50-point stop, right? And if you're trading, let's say the micro, that's $5 a tick. So that's $250. And your goal is to make 100 points. Even if you're sleeping, that order gets triggered and you're out if it hits 100. Okay, I mean, if you want to be conservative, you could even put 80 points maybe, you know, but but a lot of times it hits 100. Like, so how would you do this, right? So let me show you another way here. Let's look for another one. Let's see. So like, all right, let's use a more recent one, I guess. So let's use, I guess we could use this one. See this rejection? See that? So that's the support rejection there, right? See that day right there? January 26th. So what am I doing? Well, basically what I do is I'll show you how to trade it right now. Let's click trade. Let's go to paper trading because this is just, for education, right? So they're giving me $100,000. As you see here, $100,000. This works great if, let's say, you got one of those prop firms, you're trading a prop firm account with $100,000. And let's say you're going to risk, 1%, $1,000, or maybe even less, maybe half of 1%, $500, right? So let's say they give us 100 grand at the prop firm, whatever, and we want to risk, uh, we want to risk $500, right? Half of 1%. Okay, so let's do it. So I go to the trade, right? Here's the signal. So what do? I don't do anything. I just place an entry order like this. I go buy, right? And then whatever. I place well, actually I'll have to show you on the current chart, but so here's the signal, right? Because the market rejected this day and it formed a support level right here at 69.32. What we're looking for is this. We just want the market to touch that level, and that's our entry. Put our stop loss 50 points below, right? And boom, write it back up. See how it hit 100, and then you're already out of the trade. So that's basically how it works. So now let's go to the real market, right? Because I mean, the past is great, but we want to see the live market, right? So, okay, so here's the live market. So how would I trade this? Perfect example. So here we go, a couple days ago, right? March 9th, or about a week ago, maybe. We had a huge rejection at this level right here, 66.37. So if I was going to do this strategy tonight, I would go like this, buy, right? And then I pick my level. Let's do 2 contracts because it's $5 a tick, right? So, okay. So it says buy. I hit the buy button here. Oh, wait. It didn't let me, hang on a second. Hit buy. It's not letting me. Oh, there we go. It's, oh, limit. Make sure you hit limit order, by the way, for this to work. All right. So here we go. So here is my market, right? Let's just shut this off for a minute. So we got a limit order, right? So where does the limit go? Right here at support. See that? 66.40. Then I'm going to put my stop loss. Let's say I want to risk, I don't know, let's risk maybe, what did I say, 50 points, right? So 50 points times 2 contracts. So that's $10 a tick. So I'm risking 500 down here, right? About there, 500, right? That's about right there. And then, yeah, there you go, 500. And then take profit, right? Now I drag that up. I said I'm risking 50 to try and make 100. So 100 will be here, right? There you go. So you're risking 500 to make $1,000. Not bad for one day's pay, right? If it works out. Okay, let's lower it even more. Let's say you risk 250 to make 500, right? Because they're giving the prop firm's giving you 100 grand. And the thing that happens with prop firms traders is a lot of them blow the account because they risk way too much. But by doing it this way, if they're giving you 100 grand, you're only risking 1 to 2 contracts, 500 to 1,000 at the most. And that's it. Hit buy, set it, and forget it, and so now what can happen? Well, I'll tell you what can happen. I don't know what's going to happen. No one has a crystal ball, but let's say this thing hits. Okay, either one or two things are going to happen. It's going to hit support and it's going to rally and you're going to make your $1,000 in your prop firm account, or it's going to hit support and it's going to stop you out. Big deal, okay, on to the next trade. But the beauty of this is a set it and forget it system. So you could be sleeping and this order's in the market, you can't lose more than this and you can't make more than this because your orders are set. And let's say you go to work in the morning and you come back and it's a winning trade, you're good to go. Now, I personally would not place this trade today because I right now have a little bit more of a bearish bias because after the Fed meeting today, some of the things they said, I don't think at the moment I would want to place this trade, but if it was before that Fed meeting, I probably would have bought this support level and placed an order there. But I'm a little bit bearish now because after today's Fed meeting, it sounds like they might, you know, talk about not cutting. They talked about not cutting interest rates and some other fundamental factors. Plus, oil prices are starting to form support levels. So this thing could break. But even if it does break, you could do it in the opposite direction too. The same thing that applies for the bullish signal applies for the bearish signal as well. And I will show you guys that in another video. But for now, this is a perfect set it and forget it system. So again, if you're working a part-time job and you want to trade the market, this is a great way to do it. This trade will work on the ES, the NQ, the Russell. It might even work on some other markets like the Euro or the grains as well. So that's about it for the video. If you guys liked it, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And always remember to use risk management. Never risk more than 1 to 2% of your money or the prop firm's money. That way you survive the long term for your trading. Have a great evening.